you see? So if we can't catch up to building construction,
Mhm.
what other hope is there for somebody to be able to afford a better house?
Yeah, exactly. So we know that the supply issue is out there.
Mhm.
And when we say supply issue, that means that it's not going to be fixed anytime soon. And it's going to take a long time for us to build more units so that prices, would have some flexibility to either go up or down. Right now, prices are just not going down because there's no supply. But what everybody needs to take into account is that the greatest way to increase home price affordability for today's market is not just increasing supply. As we talked about, it's going to take a long time.
Mhm.
And there's lots of things that go into that can help support that. You can make it easier to build houses. You can create more density on smaller spaces. All those are great things that many jurisdictions across the country are implementing. We're seeing that happen in Jacksonville. But in terms of home price affordability, it's not going to get here quick enough.
Mhm.
But what is potentially going to impact home price affordability is interest rates. So many of you have seen the positive headlines that have come out about interest rates, especially over the last couple of months. I pulled a couple just recently here, but interest rates were as high as almost 8% at one time, and they have fallen to below 7%. Last I checked, they were at 6.75%. And what you're also reading is, like this headline is saying, home buyers rush to get mortgages as rates drop, right? It is all relative. When you start to see some declines in interest rates, what you also start to see are mortgage application rates increasing, which is an indicator of additional home buying demand, which is an indicator of additional sales. And what that leads to, again, is home price increases given the same level of supply. So it's like the most known thing by builders out there. If rates drop, you're expecting home applications to go up, which, given the same set of circumstances, largely leads to home price increases.
Yeah, which makes a lot of sense. Like, I mean, if we're already short on the amount of houses that are for people to live in, and we've also been weathering this like super high interest rate environment, it's not a big leap to believe that there's a bunch of people waiting on the sidelines that are waiting to like try to go get their home once this like mortgage rates go down.
100%.
Yeah.
Right. Because if you think about it, in Jacksonville, we've had over 2,000 sales in January, which is a large number of sales for Jacksonville.
Mhm.
We had over 2,000 sales in January and February. And that was when interest rates for those buyers were at about 7.5%. So interest rates are way up here for those buyers that closed in, let's say, January, and their payment was already here.
Mhm.
And if you already saw that validated, that there was still enough demand, that home price affordability was still good enough that people are buying at that rate.
Yep.
Well, if you start to see that interest rates are going to come down, and you know that people are already buying here, interest rates coming down actually creates the ability for home prices to go up, given that that payment would stay the same. And many people aren't thinking about this. But what we see over history is that when interest rates go down a substantial amount, the following year you see above average home price appreciation. And it's because of that mentality right there. People make most of their decisions on buying houses based on a monthly payment. And if that monthly payment is here when your interest rate is high and the interest rates come down, the demand for buying goes up, prices go up, and it still is affordable at that same interest rate that you had. You just have higher prices and lower interest rates to get there.
Makes sense. Which, you put this data before and on a past show of just what home price appreciation does after interest rates drop, right? So we looked at 1982 to 83, 84 to 85, 85 to 86, 92 to 93, 2000 to 2001, and 2008 to 2009. And it shows that when there is a interest rate drop, basically home price appreciation goes up.
That's what happened every single time.
Yeah.
As long as we've been tracking the data,
Yeah.
that when interest rates dropped at least 1% from one year to the next, you saw home price appreciation, except for 1 year. And that was the year from 2008 to 2009. And the reason that you saw a decline in appreciation that following year, depreciation, home values going down, is the source of why that happened. Real estate caused the Great Recession, and that's the reason why it did not perform like other examples here. So absent of real estate causing the issue, the other data that we have supports that when interest rates go down, home prices go up. Real estate for sure is not causing the decline in interest rates
Definitely.
that we expect to happen here.
Yeah. So we have the headlines. It's happening, right? Interest rates are going down. We believe home prices are likely to rise. And then you were just also mentioning this idea of like affordability and what one can pay. So you put some math behind this. You want to explain this slide here?
Yeah, everybody, I think this is a really impactful slide to look at. So what I said is, okay, in January 2024, just a couple of months ago, the median home sales price was $343,000 in Jacksonville. And the interest rate that those buyers that closed in January were closing at was roughly 7.5%. So those buyers had a payment of $2,398 for their principal and interest. Well, I started to run a scenario and I said, well, if that same month, those buyers were able to get a 7% interest rate, how much would their monthly payment go down? And it went down, about $100.
Mm.
And then I started to run the scenarios. And if you believe that people are already buying at this payment, and if interest rates go down, then that creates a space for home prices to go up. I said, well, how much could home prices go up if interest rates came down to 6% and still keep that payment the same? And what do you know? If home prices at some time, and I'm not saying this is going to happen overnight, but I want you to think big picture because you are buying and holding for a long period of time. If you believe, like I believe, that that creates a space for home prices to go up, home prices could go up almost 17%. And interest rates coming down to 6% would equate you to that exact same monthly payment as what people closed at in January 2024 at a 7.5% interest rate. So saying this again, interest rates right now are at about 6.75. If interest rates were to come down another 0.75%, in essence, it creates the room for 17% growth within home prices at some period of time to keep that same exact monthly payment that people are already buying at thousands of times in the month of January. That's why there's room for growth. That's why there's room for home price appreciation, even though today we are facing challenges of home price affordability. The easiest solution to home price affordability is when interest rates come down. And you want to be in the driver's seat of owning the asset when that happens, because it's highly likely that home prices will go up.
Yeah, it makes sense. As someone who recently bought a primary residence, right? Like this idea of I'm not necessarily looking at the price of the home as much as I'm looking at my monthly payment and what I can afford is really what's driving my decision. The residential home buying market is what ends up setting the price for homes, right? In general. So this idea that if home buyers are going to get the same exact payment, even if prices go up 17%, is going to make it very likely that prices are going to go up because people are going to want to buy and have that payment that monthly payment's already been proven to be satisfactory to people that are in the market looking for homes in Jacksonville.
There you go.
Yeah, that makes a lot of sense.